Good morning, everybody. It is Wednesday, September 28th. Going to take a look at the morning charts here this morning. We've got the US dollar index. This is the 60-minute chart. And what we can see here is we've had that big run up. We had that first pullback, and we've seen the price extend. It started to get a little bit choppy up here, and instead of making a bull flag, it kind of went sideways, which is a sign that we're probably getting closer to an actual top for the US dollar. And anyways, what we've seen is we've seen it start to slide away into a support zone. Now, if we just zoom in a bit, you can see some characteristics similar to what we saw previously, which is this previous little bit of a bull flag we saw here. Eventually, it more or less stopped bouncing as much, and then it slid right down into a support zone, and this is where we went long in a position. Now from there we got a nice move up into the key resistance zone where we took half our position off, moved our stop to break even or better, and then from there it consolidated, tried to eat through this resistance level, and then finally punched through it and ran up, and it gapped sharply higher, and we ended up exiting up here. Now we can see it's trying to almost put in a little bit of a top here. We've got a nice surge up, came back pretty solid, and then we saw it move up, make a new high, and then pull back. Overall, it's had a little bit of a chop here, and it started to fall, pull back down to support, making some lows. And I have a feeling we are coming back down into a support zone, and we may, depending how things play out, we may end up taking another long position in the U.S. dollar ETF, and I think we might see another bounce up into this mid-range here, similar to what we saw back in here. We'll hit key resistance around 78.40. 78.30 area, and there could be a nice little play there. It could continue to extend, but overall this recent price action is looking more of the sign of a top. So we could, if we just zoom out, see a mini head and shoulders pattern form. Just zoom out a little bit here, and what I see here is more or less we've got some type of possible neckline forming. It could be forming here this morning at support or down a little bit more, but overall I have a feeling we're seeing the dollar kind of go like this, and it could eventually drift and break down and come down very sharply over in this side here. So that's kind of the mini head and shoulders we're seeing on the 60-minute chart with the neckline. So if that plays out, we may be able to actually get a long position in here, get a nice bounce, and this bounce will actually send equities and commodities down for one more more or less dip in the market. And we are actually short the equities market, anticipating this dip, but I'm waiting for a little bit more of a washout in the US dollar, and just waiting for other areas to unfold. Now let's just take a quick look at the crude oil chart. This is the 4-hour chart, and you can see we go back about 3 months. You can see on the bottom chart here, and more or less we've got that nice breakdown. We ended up shorting right up here, caught that first break of the support trend line that we had and took partial profits, and then we got another little bounce and got a nice gap lower and extended run, and we ended up exiting down here near the low. Over the past day and a half, we've seen crude oil come back up. Unfortunately, we didn't get a pause here that I wanted to see, and we were going to take a long position. Crude oil ran right up, hit my target of 84, 85 area, and started to pull back yesterday. This morning, we're getting a little bit of a push back up to that area. And if we just zoomed out a little bit, I could see this crude oil squeezing a little bit higher. I could see it possibly moving right up in here into the 86 and becoming a little bit choppy, and then possibly heading back down again. So I do think crude oil could drift up a little bit more. I really think if it comes right up into this resistance zone across here, which is a previous peak, you can see there's a lot of areas where it had touched and bounced back. This is a pretty key area, that 86, 86 and a half area, where there's going to be resistance. So we might see it continue to squeeze up there, and it could actually be a good shorting opportunity up here. Now taking a look at the gold charts, we got that bounce that I was talking about. We got a pretty sizable bounce. Unfortunately, the majority of the move to the downside happened in pre-market trading. Went all the way down to about 530, and we got a nice strong bounce up to 6, around 75 or so. Yep. Anyways, from there we started to see it pull back yesterday, and it's got a little bit of a move up this morning, same as crude oil. That's because the US dollar dipped and made a new low, but remember the US dollar, in my opinion, is still heading higher, and the fact that it's pulled back into a support zone means it's more or less reloaded and ready for another move higher, which will put pressure back on commodities and stocks. So if we just take a look at this chart, you can see same with the oil chart. Overall, we've made a lower low. There really aren't any big highs. There was a little bit of a previous section, previous price action here where we did pierce that high and we're getting a pullback. But we really haven't broken anything substantial. I feel as though it needs to form some type of base here, or we're going to see it continue to pull a little bit lower and wear itself out. Usually you get this sharp short covering bounce and everybody picking up the bottom, and then you'll end up seeing it fade and spooking all those positions back out again before it actually puts in a bottom and likely works its way higher again. So that's kind of what I'm looking for gold. Silver is pretty much doing the same thing, other than it's just a lot more volatile. We've got that knee-jerk reaction bounce back up. And again, I pointed this out. This happens quite often after some big moves to the downside. You can see what happened last time. You got this huge oversold move. It went from 50 all the way down to about $33 an ounce, and then it bounced back up and then just got stepped on for one final wave to flush people out to make a new low. And that's similar to what I feel is going on over here. We've got that knee-jerk reaction, everybody picking a bottom, and it looks as though selling and maybe just starting to pick up, and we could have another day or so before it actually possibly gets stepped on. And that's what I'm actually looking for, is that second flush out that will really spook the market, and we'll be looking to actually enter into gold and silver. Now, taking a look at the TBT fund, which is the inverse bond, I'm actually just going to flip it back to TLT. Just pull up. This is the actual bonds. I'm just going to zoom way out here. You can see we've had a pretty extended run in bonds, and it's starting to become pretty choppy. It's running at an extreme level, and the fact that it's coming up and starting to make this kind of price action here, I pointed out this is where the market is trying to put a top in for bonds, and we're likely to get one great big blow off top before it really washes the market and all the fear is piled into bonds. Anyways, 2 days later we got that huge move to the upside, that big more or less exhaustion move, and since then we've seen it fade back down. The fact that it went up and came back down that quickly is a pretty good sign that it's overdone. And I pointed out I wasn't really looking to buy the exhaustion move up, simply because it could continue with everything going on, where we are in unprecedented times here and anything can happen. So what I'm waiting for is to see the blow off top and a pullback in some type of bearish pattern to more or less form, and bearish volume, and we'd actually be looking for more or less a bear flag. And depending on how it drifts up, we could be looking to actually take a short position and play a move down, probably into the key support zone. This will be first stop, be the 108 106 area down into here. So that's kind of what I'm looking for in bonds, but I'm not getting in front of it yet. I think it's got another day or two possibly to unfold before it actually makes a pullback, if it does. Now, taking a look at the SP 500, this is the 10-minute chart, and we are zoomed out about a month. And I'll just zoom out a little bit more. You can see where we are. We had the market top out there back in July, and we saw a market pull back, and now we've got these gaps where we gap up, gap down, chopping sideways here as the market consolidates and digests the big move that we had to the downside. And more or less, I pointed out earlier this week that that big gap down in the morning is most likely going to turn into a gap fill, and we had that gap fill, and the fact that the market had so much upward momentum, I pointed out, we'll probably see it continue to go higher and run right up into this resistance zone. We didn't quite stretch as high as I really wanted to go. I was hoping yesterday we'd actually get something very similar like we saw the day before, where you kind of chop sideways for most of the day, and then in the late day you see it just short cover and kick in, and you run and you stretch up really high. I was really hoping we'd stretch right up into this level, and it started to, and that's when I sent out my update saying we're probably going to go short into the close. Unfortunately, big selling stepped in about 3 minutes after I sent that out, and it started to drop. And anyways, I sent the alert out, and we ended up going short as it started to break down. And there's still lots of potential for this to continue quite a bit lower. If we were to just draw a couple quick lines, there is a pretty good range to the downside. We could drop all the way down to this bottom end of the range or beyond, and that will give us a pretty good return, especially with the 2 times leveraged fund. Now, I wish we could have got that run up, because I do like to try and time things as close as I can, but I think there's enough downward momentum still and fear in the market that I think it was worth jumping on board and playing this move to the downside, because sometimes you just have to jump and get on board with a move, because it could leave you behind. Now, looking at the futures for this morning of what's unfolded through the night and in pre-market, here we have got the the SP 500 futures. This is a 10-minute chart zoomed out 24 hours. And the heavy volume at the bottom left, that is regular trading hours, 9:30 to 4 o'clock Eastern time. And yesterday we had a big gap to the upside. We started to see the market become choppy with price surges, and then we had a nice run up. I was really hoping this was the run that was going to pick up speed right up into the close and close us at a very, very extreme overbought condition, at which point we were going to be shorting it, and then we'd get a huge move to the downside. Unfortunately, right after I sent the alert out, pretty much right up here as it broke out, I was hoping it was going to continue, but it started to sell off, and selling volume ramped right up into the close, and I think I got the alert out. By the time I actually got it out to everybody, I think it was trading somewhere down here, and it continued to drop. Had a quick bounce into the close, about a 5-point bounce, but I think that's a lot of intraday traders playing these end-of-day sell-offs, and they're just covering their positions into the close. So they make their money on this quick drop, and everybody says, I'm not holding it overnight. The intraday players get out, and you just see a ton of short covering into the close, and it ramps right up. But overall, in overnight trading last night, we saw the market actually fade back down to the lows that it made earlier in the day. And since then, it put in a little bit of a triple bottom. And since then, we've seen it kind of have some bullish price action going up. But you can see it's been pretty choppy. We had two big up bars, came right back down. It's starting to move its way up, and it's starting to look a little toppy with a topping candle here. So we'll see how that plays out. We could see it end up pushing back up. It could even push to a new high and just pierce yesterday's high, or it could just pull back right into the middle of this, continue to push up into around the 1184, 85 area, at which point I'm hoping that we end up getting the sellers to step back in and for the market to roll over and continue lower. So that's it for this morning, and hopefully that helps. Talk to you later. Bye bye.